Hi and welcome back to 𝗕𝗘𝗪𝗀𝗀. Today guys, we're going to be diving down into the charts, taking a look at what is going on in the crypto space. Obviously you've seen a bit more of a sell-off today. We have Bitcoin pulling down the entire market again, and we want to take a look at BTC to see exactly what's going on there. Are we likely to find the bottom anytime soon, and whether or not we're going to start to see a bit of a reversal to the upside after completing that head and shoulder pattern, getting a retest, getting rejected, and all of that good stuff. Right, as we get into this, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at 𝗕𝗘𝗪𝗀𝗀. In the link in the description down below, you will find our link to our Discord server and, of course, to our Patreon services. If you're looking for a little bit more around strategies, accumulation, bear markets, all that kind of good stuff, check out the Patreon. And do join us in Discord if you want to be the first to know what's going on in the crypto space. We drop things there generally before they land on YouTube for various different reasons. But do check them out. Links in the description down below. Right, with all that said, done and out of the way, let's actually jump on down into the desktop and take a look at what's going on here with Bitcoin. Okay guys, so we're going to start things off on the hourly, right? We can obviously see, if I zoom on out a little bit here, you can see the head and shoulder pattern, the left shoulder, the head, and the right shoulder, obviously all the various different waves that we've been counting. And obviously, as we start to really zone in on this breakdown of our shoulder, we can obviously see that we had the retest of the neckline and the rejection from the neckline. Okay, so this actually happened twice now. Okay, so effectively this was your first test. This actually happened on the 7th of January. This actually led to us getting down into this low point of just a little bit higher than $40,000. We pushed up, we gained this a nice ABC move, getting that retest of the neckline, and now we're on that ABC to the downside, right? We can kind of see that happening right there as a point of recording this video. Now, obviously, the hourly is oversold on the stochastic RSI, and for the most part, if you actually hop over into the weekly, it's oversold. Right, and heavily oversold at that. You take a look at the daily, it's heavily oversold. But the 8 hourly is actually on the way up, right? So we are looking for some kind of correction here to occur, both on the 8 hourly and on the 4 hourly. They both are not in consensus with the hourly chart, the daily chart, or the weekly chart. So we need to be aware of that. Now, obviously, if we also throw on here the relative strength index, so we actually have a stochastic RSI and an RSI, right? Two different ways to kind of analyze this. Now, the stochastic RSI is really sensitive to price movement, and therefore it helps us understand, what kind of knee-jerk reactions we're likely to see. The regular or standard RSI is really good for trends. Okay, if there's a trend, it's going to be really helpful to kind of understand what's going on with the bigger picture, right? It's not as sensitive to price movements. Now, obviously, you have to use these in conjunction with other analysis. We use Elliott wave, we really like that, but there are also a dozen other patterns and a dozen other trading patterns and strategies that actually work with these as well. So right now, we can say that the stochastic is oversold because it's really sensitive to price movement, and we're likely to see some kind of bounce to the upside. Here on the relative strength index, we can, of course, acknowledge that we're heading to the oversold area, and we are not there just yet, which basically means that we have that 4 hourly and 8 hourly timelines. These two here that are requiring some form of correction. The 8 hourly is actually a little bit further along on the relative strength index rather than the stochastic RSI. But again, the daily oversold is pretty much where we are heading here with the RSI, and the weekly we're actually oversold here, but actually, not oversold on the RSI. And this is the difference we need to acknowledge, right? Where you can see obviously that we would not actually been oversold in the same way that we have with the stochastic RSI on the weekly. Now, when we actually take a look at that weekly chart and we think about all the times that we've actually seen massive pumps to the upside, this has been from an oversold area on the stochastic RSI. However, we have not been oversold on our regular RSI. And during the trend, we can see that obviously here we are more kind of sensitive to each price movement, but the trend on the RSI is actually looking pretty good. It's pretty steady up to the everball area, and then we pull back down. Obviously, on the stochastic RSI at that point, we crashed it right down into the oversold area. Okay, so this is where we are right now, right back down into this low area. This is the same area that we actually were at the beginning of the year of 2021, and we obviously know where that was going previously. So whether we take a look at the stochastic RSI, understanding that we were oversold at the beginning of 2021, like we are now at the beginning of 2022, the RSI, the standard RSI, is actually in a very similar position that it was at the beginning of 2021 that it is right now. Okay, the only difference is obviously that slightly slower line not quite catching up with us. But I digress a little bit. So we're going to actually jump back into our hourly chart here. I just thought that was really important to kind of understand, why we use the stochastic, because it's a little bit more sensitive to the price movements. But there is a good use case for the relative strength index as well. So obviously, as we take a look at this, we can see that we are pulling back down. Now, obviously, we measure this out. We have that ABC move. So we want to know, are we going impulsive to the downside on this micro scale? And we're very, very close to it. So ideally, we want to kind of stay above that 1.382. That comes in at $40,621. Okay, so $40,621 approximately, right, in that kind of range. Now, if we actually take a little bit of a stand back, we can also kind of see that there's the ability here to potentially argue that we've seen a 5-wave count, and there's a little bit of noise here, so I'm going to clean this up a little bit, right? I'm going to remove the larger ABC wave, and I'm going to remove some of these smaller micro movements. This is the problem with the hourly chart, right? Sometimes it gets a little bit too noisy. It's really hard to kind of see, exactly what's going on. Now, it is a good move to the downside here, push up, and then obviously a pull back down, a push up, and potentially a pull back down. Now, you could argue that this is actually a 5-wave count. 1, 2, we'll come down into this range here for a 3, maybe a 4, and maybe we'll go down into that lower range to complete that 5th wave. Now, it doesn't actually align, to a standard kind of wave count on that in that regard. And what I mean by this is it wasn't triggered as impulsive because we haven't actually crossed this 1.382 area at $39,000. But you can, of course, draw it this way because it makes a little bit more sense of our current position. That being said, it's too soon to say whether you're going to end up with that 5th wave. But if these micro moves continue the way that they are, it will very much look like it is a impulsive move down for Bitcoin as it completed this shoulder, okay, this right-hand shoulder. A retest up here being the test for the 4th wave, and then a further rejection and pullback. Now, obviously, it's not technically impulsive because we haven't seen the correct levels of move. We got close to it, but we didn't quite kind of tick it off, right? So with that regard, we kind of can acknowledge this as a bigger ABC to the downside, and then we are looking for a larger ABC to the upside. Again, the 4-hourly and the 8-hourly are not quite aligned to the hourly or the daily or weekly, but it does seem to be a need for a push to the upside. Okay, so we are either going to pull back a little bit lower and then see this move to the upside, or we're going to start to see this relatively soon without actually going down any lower. So what I'm trying to say here, so it might be confusing, is that this, although could be construed as a 1 through 5, it doesn't technically meet the requirements for it. Okay, so although it does look like we potentially could come down this way, it's not something that is technically there just yet. Okay, and we can obviously draw it up after the fact if it does this, but it's not technically impulsive because it hasn't crossed that 1.382 move in terms of that C wave. So we can draw it as an ABC. Now, obviously, we have had an ABC up, and we can see that we're having an ABC down, right? And again, we are very, very close to turning this impulsive, and you can kind of see it just with this action here. It's very possible that this here turns into that 1, 2, 3, 4, and 5 move, taking us down into that lower low, again then actually allowing us to draw the 1 through 5 move that we have on the slightly larger time frame. So overall, I think there is the potential for a downside here. But it really does depend on what happens next. Do we drop down to $40,500? If so, then we're impulsive down. We should expect more downside to go lower, i.e. set a lower low. If, however, we hold that and we actually start to move up past this area here, which would be $41,500 or $41,600, then actually that would actually mean that we are going ABC up, not going down any lower. Okay, so a different wave count. So for now, what we're going to do is we're going to label this up with an A, B, and C move to start with. Then we're going to grab a horizontal ray, okay, and we're going to mark this area just here to say that if we cross this line of 41,600, then actually what we're looking at here is an A, B, C to the upside. Okay, now of course if we go down lower than let me actually just get that on the chart so we know exactly where we're aiming. If we pull that onto here, if we go down lower than 40,630, again I'll grab another horizontal ray. I want to pop that on to that threshold just there. We'll delete the fib off there so it's a little bit clearer. If we go down lower than that area, then what you actually have is the 1 wave, 2 waves, 3 waves, 4 waves, making sure we don't cross wave 1 and pull back down into those lower ranges. Now, we know that there are some potential moves down to that kind of $38,000 range according to the weekly chart. So we want to acknowledge that there is possibility of that. So again, we're monitoring this situation. We could see an ABC up and then a further ABC down, or we can go impulsive here and we can see the 5 waves down. Okay, so overall, we are getting rejected from our our head and shoulder pattern. This is not something that I thought was going to happen based on that weekly chart. Okay, so if we actually now start moving up these time frames, we can acknowledge that the daily charts actually was looking very, very good, right? We had the formation of our head and shoulder pattern. Again, these things are not that accurate. They're reasonably accurate. I tend to use them more as an indicator for direction, as in it's either inverted or it's not inverted, and it's either bullish or it's bearish. But I try not to trade them. There are methods in which you can, of course, but I try not to. But taking a look at the position on this stochastic RSI, a serious rejection from this point isn't exactly easy to do. Okay, you need to have to first of all move up before moving down. Obviously, that neckline is there. We are looking to try to get above that neckline, and obviously, this is a part of a much bigger C wave. Okay, so what we actually have forming here is a much larger A, B, and C move on our daily chart, or more specifically, the weekly. Okay, so this particular pullback is very much in line with our expectations of a B wave. Now, if we actually go ahead and actually measure the distance on this, we take it from our low point or the beginning of our A wave to the top of our A wave, we can see that there's still the possibility of coming down into that lower range. And this is what I was talking about, right? And we are still in this B wave correction. Okay, we could go all the way down into this low range of $30,000, which I don't think is going to happen, but you could come all the way down into that $30,000 range and still be a B wave, right? But there is, of course, the 786. Currently, we're holding on top of the 702, okay, the Fibonacci 702 area. That's 40,700. Now, if we go down to the slightly lower area of the 786, that's 37,339. I think that would absolutely correct the 8-hourly and 4-hourly in line with our hourly, daily, weekly. They'll all be oversold by that point, and that's when we start to see that C wave come in. And if this is the case, then of course what we can do is basically take this Fibonacci retracement tool, move it up to that low point, and then we get a good idea as to where that C wave is likely to go. And in this particular case, it would take it out into that $77,000 range. So again, you have these kind of abilities to kind of say, okay, where's the most probable area that you're going to find support? And again, you can obviously use support lines to help you with this. Does this area make a lot of sense in terms of support? Is it going to be above it? Is it going to be below it? And you can actually see here, there is a little bit of support in that range, right? And if we actually throw this right here, we can zoom in. You can see that this is an area that we found support on before, and we come over here. It's also an area that we found support on as well, okay, as well as previous resistance and support. So this actually is a pretty interesting zone to be mapping out as a 786 as a potential area for support. So if we do actually see that breakdown that we were talking about and potentially seeing this go impulsive to the downside, this is an area that we want to be watching out for. This is a potential reversal point. Now, if we do go ahead and actually move our percentage drop down there, that's 45% from that high of our A wave. That's very much comfortable. If you were following the video that I did yesterday and we actually throw this up onto our weekly chart, we are pretty comfortable with these kind of percentage pullbacks in a bull run. We have seen in the 2017 run, for example, 37, 42, 40, 35, 34, 40, 39, and then you start to see these bigger pullbacks later. But for us, most of the part of this bull run, we haven't seen significant pullbacks to those kind of degrees. The biggest one we saw, I think, was like 56%. And then again, we led up to a new all-time high after that. Even during that, we saw 24%. So being 41% is pretty much aligned to what we had seen previously. I spoke a lot about this yesterday, so do check that video out if it's of interest to you. So obviously, knowing that we have a potential pullback like that, it's not. It doesn't mean you're going into a bear market, but it does mean that you want to potentially protect profits on that journey if you're noticing kind of big moves like this. Now, obviously, where we are right now, it doesn't make a lot of sense to just try to capitalize in on that last little bit there. You can, of course, if you wanted to, but again, not financial advice, not what I would do, etc. Just trying to hodl this one through. But we are looking at pushing up into new all-time highs. So that's kind of the gist of what I'm talking about here on our daily chart. So overall, we know there's volatility to be expected on the smaller time frame. This usually shakes people out. This usually liquidates people. There's stop losses, leverage, all that kind of stuff. And the ways that you see people like Binance, buying up 43,000 Bitcoin, $2 billion worth of Bitcoin, is because they're taking advantage of stop losses. They're taking advantage of exposure, people using leverage, etc. Right. So as long as you know how things are operating, how institutional investors or market makers operate in the space, they don't just buy the dip as such, they go after pockets of liquidity. I've spoken about that a few times as well, but by doing so, they're able to accumulate, right? And basically you see the price come down to key areas where people can get liquidated. So right now, this is an interesting point. There's a little bit more room to potentially fall down to. There's no guarantee of it, but it's obviously potentially there. And then we do see that reversal and that push to the upside overall. Okay, perfect. Now, obviously, this is a big ABC up, and of course, we can acknowledge this as a bigger ABC to the downside as well. Nothing in there is impulsive at the moment, so looking pretty good from that perspective. Now, as we come up into our weekly chart, again, we are still expecting all-time highs. Again, everything that we've been speaking about so far is pretty much aligned to this. Now, this C wave has the potential to go impulsive. So if we actually measure this distance here, of our A wave, we move that over to the theoretical area of a B wave low. Anything above $91,000 would basically trigger this to being a 1, 2, 3, 4, 5 wave count. Okay, and basically that obviously then takes you up into these much higher areas. Now, $187,000 seems absolutely insane, specifically when we see the market bleeding out the way that it is. But it is something that has been technically on the charts for quite some time for us. So I do want to kind of highlight that is still on there. And again, these areas that we've been targeting out, with that bigger kind of fifth wave move, is something that is still potentially on the horizon here, considering how oversold we are on the stochastic RSI. And every time that we've been in this position of the stochastic RSI, we have seen massive gains for Bitcoin. And again, you can see, last time we were down here before, the $65,000, we were oversold. We pushed up massively. We pulled back. We went back into the oversold area. We pushed up to $69,000. We pulled back from $69,000 back to the oversold area. Is $77,000 next? That's the question. So let me know your thoughts in the comments down below. Do you think Bitcoin is going to $77,000? Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, hope everyone has a fantastic day, and I'll catch you all in the next one.